Hello guys, my camera is turning on now. Wow, not a very good lighting now. Let's see, can I change that a bit? How are we all doing? By the way, I did in fact change the background color. I can't really change it now, but I guess it's okay. But I did change the background color. Last stream, it was red. This stream, it is green. So you do the math. I mean, we are about to get the Jerome Powell speech. More about that exactly a bit later, what to expect, etc., what I think will be happening. But I mean, very simply, last stream we did have red light in the background, and this stream we are having green lights in the background. So, I mean, based off that alone, I'm pretty bullish. If I can say so myself. Anyways, let me know how you guys are doing. Let me know it in the live chat, and I'll read it out loud in a second, in a minute. Let's discuss some markets. Let's discuss what is going to be happening next. Let's discuss some good opportunities in the market, because there are definitely a lot of good opportunities in the markets now. We'll need to talk about all of it in this live stream. Will be a little bit of a quick one. We'll be watching the live stream from Fed Jerome Powell, because he will be doing a speech. It will not be an FOMC meeting. It will not be like a Fed conference. It will not be a Jackson Hole event. It will just be a Jerome Powell speech at an economic calendar thing. So basically, I think he's going to be saying the same thing as usual, but who knows? Who knows? Because always we are up for some surprises most of the times. Most of the times we're seeing some surprising things happen during these speeches. So let's talk about that exactly a bit later. Let me know how you guys are doing. I myself did catch a cold. Okay, I'm in very hot weather here, but still I did catch a cold. So that's not so good for me. I mean, it is a pretty bad one, but still I'm here. I'm here live streaming. I mean, I'm sorry if the quality will not be as good as the usual quality, okay? But I mean, just bear with me, okay? I'm still out here. I'm still live streaming, still giving you the alpha. And today I did upload 2 videos, because this morning's update video, and also I uploaded another video talking about the Ethereum chart. I think this is a crucial video for everyone to watch, because there is a big opportunity now on the Ethereum charts. Everybody is panicking, but in this video I was talking about, basically the big Ethereum opportunity we're getting now. Yeah, we're seeing a bit of a dump now in the markets, definitely for Ethereum, definitely for the altcoins. But I mean, it's just a textbook analysis that is playing out at this moment. Everybody is panicking again. I do want to see Ethereum dropping a little bit lower in the shorter time frames. I do want to see the $4,010 level getting reached. I mean, possibly if this Fed Jerome Powell meeting is about to be a nothing burger, which pretty likely, I do think it will be that way. Well, then we could be seeing a little bit of an ascending triangle getting formed right here in a shorter time frame, and then we could maybe see another heavy night, maybe, and then fill up our order and then push to the upside. Let's see. I do think that at least during this week, pretty big chance that we're going to be seeing at least 1 week to the downside, to be filling up our order, to be grabbing that liquidity below, if this chart will load, below the previous low over here, and then we can reverse back to the upside again, and then we can go back to the upside again, in my opinion. Like I've said in my recent few videos, I do not think that bull market is over already. I do not think the bull market is over yet. Okay, now I do think most of you guys agree with me on this one. Most of the people do not think we have entered the bear market yet. Now, I will say, I do not think we have entered the bear market yet, okay? But this can change. It can change like I've said in today's update video, well, if we're going to be losing this level of support, it's going to be looking very dangerous, okay? Because then I just need to be highlighting it again for the ones that have missed it, because it's so super important. We have grabbed the liquidity above this previous high over here, liquidity grab, okay? Then over here also, this was our first initial low, okay? Then a lower low after the liquidity grab, then a lower high, okay, filled to even get even higher again. So a lower high, definitely flipping an uptrend structure into a downtrend structure. Right now, we still have the possibility, if we hold on to this level, we still have the possibility of bouncing back and still being in an uptrend and still going even higher, right? We still have that opportunity. I do think it's a pretty high likelihood. But if we're gonna lose this level of support, if we're gonna definitely lose these previous lows over here, well then, pretty likely we're going to be confirming another lower low, lower than this previous low, and then definitely we are going to be trading in a downtrend with a liquidity sweep at the exact high, with interest rate hikes at the exact local high, right, at the lower high right over here, with the longer time frame charts not shaping up very nicely. Keep in mind, I mean, we are reaching pretty close to that top. So yeah, in the case if we're gonna lose this support, well then I'm going to be getting very cautious. Right now, it's not happening yet. We are not losing support. People are panicking. People are fearful. We are seeing still a textbook analysis being repeated. We're seeing still everything looking extremely good. Ethereum shaping up very nicely. So keep this one in mind. We're still looking very good. We should still be bullish. Just, we should be a bit cautious that whenever we are losing the lows, we should be having a look into lower levels. Anyways, today we will more so talk about the opportunities we're getting in the market now, but also the Fed Jerome Powell speech that we will get in just about 25 minutes from now. It will be at 8:35 p.m. Dubai time and 6:35 p.m. European time, Central European time. So yeah, from Central European time zone, you do the math on to your time zone, right? 6:35 p.m. European time zone. So that's going to be the time we will be watching the Fed Jerome Powell speech. Now, you let me know in the poll that I'll be creating now in this live chat. I'll be creating, start a poll now. Will this speech be bullish? And then, yes, bullish or no, bearish. So, are we going to see a pump or are we going to see a dump? Let me know in the poll. Will it be bullish or will it be bearish? Let me know in the live chat. Okay, in the live chat, there is a poll right now open where please, if you just let me know if it's going to be bullish or bearish, then we know what our community thinks. And usually our community is right. Okay, usually they are right. So let me know what you honestly believe is going to happen. And then probably we're going to be right again. We have this advantage in the market where we as a community already know what's going to be happening next. So yeah, stock market did open up a little bit in the red. It's dumping a little bit. I mean, that's also the reason why Bitcoin is, again, falling a bit to the downside in the shorter time frames. On the 15-minute candle again. Wow. This is insane. No, but the stock market falling a bit to the downside. But still, generally, it's kind of insane, right? How the stock market is still reaching at all-time highs, sitting at all-time highs, pretty much. I mean, yeah, today we are going down a bit, right? But still pretty much sitting at all-time highs. Nasdaq as well, and then Bitcoin just lagging behind, man. And just lagging behind, just even dumping to the downside. I mean, it's crazy. It is crazy. I mean, I do not... there's two ways how you can interpret this. The one way is going to be that Bitcoin is just lagging behind and we will soon catch up. Just like with the global M2 liquidity. We will soon catch up and we will catch up with all of these markets and we will catch up bullish again. But this is why you need to join the Platinum group with the first link down below. Today, I did talk about the fact... let me load up the video. can do it quickly. Let's see. Today, in the Platinum group, I talked about a very interesting fact. And I do not know which one we should believe. Which one of these facts. Okay, it's in the Platinum group. Anyway, I'll show you it right now, just on our charts, on our normal charts. Okay, I'll draw it again. Because, and by the way, yeah, in the Platinum group, I shared this first. So if you're in, you already know what I'm going to say. Here, in 2019, the same thing happened. And I had a look into it. If you've been following me for a longer time, you know that I've been having a look into this 2019 scenario multiple times. Because during this scenario, we also saw a bit of a parabolic trend. At the exact top, at the exact peak, we saw our first rate cut, and it was pretty much a recessionary cut. Look at what happened next. Now, for Bitcoin, we saw a bit of a mini bear market getting started right after that rate cut. First, we went parabolic leading into the rate cuts, and then the bear market started. But very interesting during that time was that the stock market during 2019, let me grab it. 2019, here, it was during middle of 2000, somewhere around, let's grab it exactly. It was during July 2019. So July 2019, here. So the stock market still went up, right, during this period. The stock market, especially in July over here, it still went up. While Bitcoin, okay, and this was after the rate cut, Bitcoin went to the downside during that time period, okay? So is this going to be, again, a scenario we should be cautious of? Is this something we should be worried about, right? Where the stock market might just continue to go up, go up and go parabolic, continue this trend, right? And Bitcoin just going its own way, Bitcoin just going down, just like we did right over here. I mean, I do not want to be doom calling yet. I do not want to be getting too bearish yet, okay? Not at all. But I just want to be highlighting this, okay? That this has happened in the past, and that if we do lose our structure, okay? If we do lose our structure, I'm not going to be the one saying, oh yeah, the stock market is still going up, so Bitcoin has to go up. Bitcoin can go its own way. We have seen it in the past in a very similar situation, in a very similar timing in the market, where we have seen that rate cut, where we have seen a parabolic move to the upside, where we have seen a recessionary rate cut, where we have seen the stock market going up, and still Bitcoin went down. I mean, I'm not saying that it will happen again, because I'm still bullish, okay? Keep this one in mind. I'm still bullish. I'm just pointing out that if we're going to lose that market structure, we can indeed be going down even further. It can happen. Be cautious of this fact, okay? That is why I've been saying in the last 1 or 2 or 3 months, I've been saying the top is coming in dangerously close. Now, again, I do not want to be doom calling. I do not want to get too bearish, because simply I'm not. I'm in the short term being very bullish still. So do not get me wrong. I mean, I've been bullish throughout this entire bull market. I'm still bullish. I'm just getting a bit more cautious at these highs, okay? That's the only thing. Okay, we've got that covered, okay? We've got that covered. Okay, don't comment me in the comments now saying, oh, you're bearish. Oh, you're a stupid bear. For this day, this night, I mean, all I can say is that I've got my green lights in the background turned on. So it's all manifestation, because now I've got my green lights turned on in the background. It has to mean we're gonna pump. It has to mean we're gonna pump. Maybe not tonight still, but definitely if we're gonna see this liquidity grab still for Ethereum, it has to pump. It has to pump. I mean, it's all because of the lights. I mean, it's no financial advice, of course. It's just the lights. Anyways, let's have a look into some chats. It seems he is a bit tipsy. Ooh, me? I'm not tipsy at all. Maybe it seems like because I'm red, because of the lighting, but I'm not tipsy at all. Far from it. I am a little bit ill. I did catch a cold, so I've got a little bit of watery eyes. Maybe you can see it. Please do not spam, my man. Now I have to block you, unfortunately. I'm sorry about that. No, but I'm not tipsy. I'm a little bit. Are you drunk? No, bro. I'm all good. I'm sober. I'm so sober. Like, you cannot get me more sober. Literally at this moment. I think right now we're gonna get all of the troll comments. Bitcoin to Jupiter, Ethereum to Neptune. Let's go. Ethereum to the sun. Live stream dump course. I mean, this time it's not a curse because now we have got green lights. Green lights, away we go. Green lights, pump. Let's go, pump. Do we enter long? So for me, I do want to enter a long. I do want to enter a long, especially on Ethereum. If we do fall a little bit more, I want to enter at the best possible timing at the liquidity grab over here. But for that, you should watch my video that I've just uploaded 3 hours ago about Ethereum history, repeating why Ethereum is looking so bullish right now, why it's looking good, and where I want to be entering and why, etc. So yeah, that's a pretty good, but of course after the stream, guys, after the stream. In this stream, I'm gonna share a lot more alpha that you cannot miss. So I heard Powell will share his altcoin portfolio. Yeah, he's gonna share his altcoin portfolio. Also, today, there was this rumored news that was gonna be coming in from like the Trump meeting. But I guess nothing came out of it. Nothing bullish or nothing insane came out of it. Mind me, let me know if I'm wrong about that, because I didn't check up on it. No, nothing happened. Nothing happened from the Trump speech. No, so nothing happened over here. Maybe something cool will still happen with the Fed Jerome Powell speech. However, one thing that I will say is that this is pretty much a speech where, I mean, not from the Federal Reserve, right? So that's what I've seen. That's what I've read about it. So probably Jerome Powell is not going to be mentioning anything out of the ordinary, not anything crazy. He's just going to be pretty much, I think, copying the last speech, and he's just going to. That's pretty likely what's going to happen. I mean, and I do not know what the best way to interpret this in the market is right now. Probably because we're already in a bearish momentum. It would be that more likely bearish continuation would be expected. But also at the same time, during the last speech, during the last Fed Jerome Powell speech, we did see a little bit of a pump, right? We did see a little bit of a pump right here afterwards. So at the same time, if that is just going to be repeated, the same speech, maybe we can be seeing a little bit of a pump again, maybe a bit of a dump, and then after the speech, a pump again, just like we have seen right over here, right? So I'm honestly not quite sure what's the best way to interpret this right now at this moment. One thing that I will say though is that I think it's going to be the same, just like the last meeting, and that was right over here. And but if he is going to be saying anything crazy, well, be prepared, guys. Get your wallets ready and at least get your trading account open, because then, I mean, you want to jump on it very quickly if something does decide to happen. And then if you're watching, well, you're the first one to know, right? Then you're in front of the market. All right, you couldn't see it. No, but so this history might be repeated over here. So that's why we might see a bit of a dump, and then after the meeting see that pump, just like we have seen right over here during our last Fed Jerome Powell speech, right? But this one was during the FOMC meeting. This one is a little bit different. It's not a Fed Jerome, like it's not an FOMC meeting. What if he says we're looking to end? Oh yeah, if he says we're gonna look to end QT, that's gonna be insane. But I don't think he's gonna do that during this speech here, because it's not like he's just going to be um, talking about economic outlooks and the Fed, their outlooks. They're not going to be probably talking about monetary change or anything like that. Monetary change, etc., that will be discussed during a FOMC meeting. That will be discussed during an interest rate decision. Right now, that's not the case. Right now, it's just basically a summary of what Jerome Powell has already said. Probably. I mean, I could be getting shocked. I could be wrong about that. Of course, I hope I'm wrong about that. I hope that we're going to see something great. Next 5 minutes. So it's going to be happening in 10 minutes. It's going to happen in 10 minutes. So, yeah, make sure to be prepared. Make sure to be prepared. Let me know in the comments down below what you guys think is going to happen. One second, guys. I need to do some texts about some important stuff. Also about the meeting, preparing everything. All right, there we go. Let's have a look into some questions as well in a second. All right. Also need to send out one text. All right, let's have a look into some questions, and then after that, load up the stream of Jerome Powell. What's your opinion about ISO 20? I did hear about it, but I'm not exactly quite sure what it is. Maybe it had to do with XRP, didn't it? I'm not sure about that. This bull cycle worse than previous bear market. I mean, yes and no. I mean, if you really think about it, I see this comment coming in a lot, very often. Everybody is always, and I get it, but everybody is always saying, oh yeah, this is the worst bull market in history. It's the worst bull market. No money was about to be made. I get it, but that is what everybody always says during every bull market. They've also said it over here. They've also said the same exact thing because people expected a parabolic blow-off rally for everything, for all our altcoins. You need to be adaptive in the market. If you have a look into hindsight, into the 2021 cycle, and you look into this cycle now, looking back at it, you're thinking, this was a great cycle. But if you are living in the moment at this top here, you are thinking, this is a shit cycle, because guess what? There were so many shit coins that dumped to zero. There were so many altcoins that dumped to zero. There were so many altcoins that didn't survive. It was hard to trade, arguably, for a lot of guys. It was hard to trade this bull market. Everybody was saying, it is the worst bull market, because look, in hindsight, this one was much better. It was much easier to trade this one in hindsight, right? But guess what? If we're going to enter another bear market, and if we're going to enter another bull market, people are going to say, this bull market here in 2024, it was the best bull market ever, and this bull market is the worst one ever. It's always that case. Always in hindsight, people think, oh, actually, in hindsight, this bull market wasn't that bad. Actually, it was very easy. Actually, the only thing I needed to do was stay long and strong, buy every dip, go with Bitcoin, go with a few selective strong altcoins, and then you would have made money. So in hindsight, you would have said, oh yeah, actually this is the best bull market ever. Now the reason why people think that this bull market is shit is because it is easy to look back at the 21 cycle and think, oh yeah, I should have just done this and this and this, and then I would have made a lot of money. No, it doesn't work like that. It's always in hindsight. And in hindsight, again, you're going to look back at this bull market and think this was a pretty easy bull market. It's just that now you're living in the moment. It's hard to trade in the moment. Just in hindsight, it's very easy to say, I would have done this, right? But when you're in the moment, it's hard to stick with your rules, to stick with a game plan, to stick with your strategy, to stick with what altcoins you are gonna buy, to stick with like if you've got an altcoin or a shit coin and you made a 2-3x, to stick to your take profit rules, right? It's hard to do that in the moment, but when you're in hindsight, it's very easy to say, oh yeah, I should have just done this, and that's why the possible market was easier than this one. Yeah, I get you. Maybe the Bitcoin dominance didn't fall as much as of yet as during previous cycles, right? But relatively speaking, this is the best bull market ever, because we have seen the biggest amount of inflows ever into Bitcoin. The biggest, by far, the biggest amounts of inflows ever. So it is more easier than ever to just grab a small piece of the pie and make a lot of money. It was easier than you would have done it right over here. I mean, I get it. I get people their feelings if you are saying, oh yeah, this is the worst bull market ever. But I think you should not look at it that way. You should look at it differently. You should look at it like, oh, this is what is being given to me, and I need to make the most out of it. It's actually a good market. I just need to become smarter. I just need to become more adaptive. I just need to be better about it. And then I think whenever you will reflect better on yourself and, how do you call it? Like really take responsibility for this cycle and your actions, etc. If you're doing that, I think then already you're coming a long way, and then you're already doing a lot better than just blaming it on this cycle and blaming it on this cycle that this time is bad, you know? Yeah, spinning facts. Last cycle is massively negative. Yeah, last cycle as well, we had the same exact people calling out the same exact thing, that this cycle was stupid or something like that, you know? It was the same exact thing. So let's load up the live stream now. Let's load it up. There we go. Let's load up this one.
Just a short drive from here. His parents instilled in him the importance of serving his country and giving back to his community.
So it didn't start.
He graduated from LaSalle Academy. I suspect there might be a few LaSalle grads in this room. And was nominated for an appointment to the United States Military Academy by, I would say, a fellow legendary U.S. Senator John Pastore. After graduating from West Point near the top of his class, unlike his dear friend, the late John McCain, who did not quite graduate in the top of his class at the Naval Academy, he received an active duty.
All right, there we go. So now we're prepared for that one. Guys, 1 second. Let me be I need to keep it open. Like that. There we go. All good now, I think so, right? I can't see the chat now anymore. That's very unfortunate. But we'll have a look into that in a second. Maybe I can do like this. Yeah, like this, it's a lot better. I'll pop out this chat. There we go. All right. Guys, I need to be excused for 1 second. Yeah, sound, I will turn it on in a second whenever it started. Let me be excused, okay? Because I still have a running nose and I did catch a cold. So 1 second, guys, 1 second. All right, there we go, I'm back. So yeah, show the lower time frame. Yes, indeed, that's true. Let's show the lower time frames. Let's show it over on weeks. Do we want Ethereum or Bitcoin? I mean, I've got an Ethereum trade open, but I don't mind watching Bitcoin as well. Let's watch Bitcoin. It will be easier. All right, I think majority is watching Bitcoin anyway. I mean, Bitcoin is the king, right? To rule everything. Let me put in this live stream correctly. There we go. Setting everything up. So it should be time where Jerome Powell should come on stage. So it should be any minute now. This stream is more up to date. This stream is has a less latency because also the event is from this. Oh no, I don't think so. So probably they're just being delayed a bit. Or not. Wait. Oh, right. I know where to get. He's already speaking, actually. Here, there we go. We can watch it here. Yeah, so this will be the best place to watch it at. I don't know how the live stream is not on yet, but still Jerome Powell is already kind of speaking, right? He's already coming out statements. But the stream is definitely not on yet. Yeah, he's coming out with statements now. What is Bitcoin doing? I mean, that's the most important thing, right? The statements and then what Bitcoin is doing. Yeah, so here it's basically just reiteration of what has already been said, right? This is, I would say, very bearish for the economy, but still bullish for the markets. Inflation has risen. More statements coming out. Why is this one not live yet? I do have another link. Oh no, this one is not it. All right, there we go. The stream is live. Also over here. Which one is first? Oh. All right. It's not Jerome Powell himself. All right, let's watch what he says then.
And thank you for returning to the Providence Chamber during your final few months as Fed Chair. You are more than welcome. Ladies and gentlemen, would you please join me in welcoming Chair of the Federal Reserve, Jay Powell.
Oh, now he comes.
Thank you for your warm reception, and thank you, Senator Reid, for your very kind introduction. It is a pleasure to be back in Rhode Island. The last time I had the opportunity to speak to the Greater Providence Chamber of Commerce, as Lori mentioned, was in the fall of 2019, actually November 25th, 2019, and I said then, quoting, "If the outlook changes materially, policy will change as well." Well, little did any of us know, just a couple of months later, the COVID-19 pandemic arrived. Both the economy and our policy evolved dramatically in ways that no one could have predicted. Along with actions by Congress, the administration, and the private sector, the Fed's aggressive response helped stave off historically severe downside risks to the economy. The COVID pandemic came on the heels of the painfully slow, decade-long recovery from the global financial crisis. And these two back-to-back world historical crises have left behind scars that will be with us for a long time. In democracies around the world, public trust in economic and political institutions has been challenged. Those of us who are in public service at this time need to focus tightly on carrying out our critical missions to the best of our ability in the midst of stormy seas and powerful crosswinds. Throughout this turbulent period, central banks like the Fed have had to develop innovative new policies that were designed to deliver on our statutory goals during times of crisis, rather than for everyday use. Despite these two unique, extremely large shocks, the U.S. economy has performed as well or better than other large advanced economies around the world. And as always, it's essential that we continue to look back and learn the right lessons from these difficult years. And that process has been ongoing now for more than a decade. So, turning to the present day, the U.S. economy is showing resilience in the midst of substantial changes in trade and immigration policies, as well as in fiscal, regulatory, and geopolitical arenas. These policies are still emerging, and their longer-term implications will take some time to be seen. Recent data show that the pace of economic growth has moderated. The unemployment rate is low but has edged up. Job gains have slowed, and the downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In recent months, it has become clear that the balance of risks has shifted, prompting us to move our policy stance closer to neutral at our FOMC meeting last week. GDP rose at a pace of about 1.5% in the first half of this year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. Activity in the housing sector remains weak, but business investment in equipment and intangibles has picked up from last year's pace, largely reflecting the AI build-out. As noted in the September Beige Book, which I bet you wonder what it is. The September Beige Book, that's a report that gathers qualitative information from across the Federal Reserve System. We'll talk about later. Businesses continue to say that uncertainty is weighing on their outlook. Measures of consumer and business sentiment declined sharply in the spring. They have since moved up, but remain low relative to the start of the year. In the labor market, there has been a marked slowdown in both the supply of and the demand for workers, an unusual and challenging development. In this less dynamic and somewhat softer labor market, the downside risks to employment have risen. The unemployment rate edged up to 4.3% in August, but has remained relatively stable at a low level over the past year. Payroll job gains slowed sharply over summer months as employers added an average of just 29,000 per month over the past 3 months. The recent pace of job creation appears to be running below what we call the break-even rate, that is the rate needed to hold the unemployment rate constant. But a number of other labor market indicators remain broadly stable. For example, the ratio of job openings to unemployment remains near 1, and multiple measures of job openings have been moving roughly sideways, not down, as have initial claims for unemployment insurance. Inflation, meanwhile, has eased significantly from its highs of 2022, but remains somewhat elevated relative to our 2% longer-run goal. The latest available data indicate that total PCE prices rose, that's personal consumption expenditure prices, that's the inflation measure that we follow most closely, rose 2.7% over the 12 months ending in August, up from 2.3% in August 2024. Excluding the volatile food and energy categories, core PCE prices rose 2.9% last month, also higher than a year ago. Goods prices, after falling last year, are driving the pickup inflation. Incoming data and surveys suggest that those price increases largely reflect higher tariffs rather than broader price pressures. Disinflation for services continues, including for housing services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs. Beyond the next year or so, however, most measures of longer-term inflation expectations remain consistent with our 2% inflation goal. The overall economic effects of the significant changes in trade, immigration, fiscal, and regulatory policy remain to be seen. A reasonable base case is that the tariff-related effects on inflation will be relatively short-lived, a one-time shift in the price level. Now, a one-time increase does not mean all at once. Tariff increases will likely take some time to work their way through supply chains. As a result, this one-time increase in the price level will likely be spread over several quarters and show up as somewhat higher inflation during that period. But uncertainty around the path of inflation remains high. We will carefully assess and manage the risk of higher and more persistent inflation. We'll make sure that this one-time increase in prices does not become an ongoing inflation problem. Turning to monetary policy, near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside, a challenging situation. Two-sided risks mean that there is no risk-free path. If we ease too aggressively, we could leave the inflation job unfinished and need to reverse course later to fully restore 2% inflation. If we maintain restrictive policy too long, the labor market could soften unnecessarily. When our goals are in tension like this, our framework has long called for us to balance both sides of our dual mandate. The increased downside risks to employment have shifted the balance of risks to achieving our goals. We therefore judged it appropriate at our last meeting to take another step toward a more neutral policy stance, lowering the target range for the federal funds rate by 25 basis points to 4 to 4.25%. This policy stance, which I personally see as still modestly restrictive, leaves us well positioned to respond to potential economic developments. Our policy is not on a preset course. We will continue to determine the appropriate stance based on the incoming data, the evolving outlook, and the balance of risks. We remain committed to supporting maximum employment and bringing inflation sustainably to our 2% goal. Our success in delivering on these goals matters to all Americans, and we understand that our actions affect communities, families, and businesses across the country. So thank you again for having me here, and I very much look forward to our discussion. Thanks.
Thank you very much. Good afternoon once again, Mr. Chair. Thank you for those opening remarks and reminding us just how tremendously the world has changed and evolved since you were last here in 2019. President of the Federal Reserve Bank of Boston, Susan Collins, is also here with us today. And President Collins, we have had the opportunity many times to discuss with you the conditions in this Fed region, of which Rhode Island is part of the Boston region. So, Mr. Chairman, I would ask you to think about your comments reflecting on the importance, what you have said, the importance of deeply understanding local labor markets. And I'm wondering if in your deliberations leading up to the most recent FOMC meeting, whether there was anything particularly distinctive in what you saw coming out of the Boston Beige Book.
So let me say a word about the Beige Book. So there are 12 reserve banks, as you know, around the country, and each of them has deep ties into not just the business community, but medical community, educational community, nonprofits. And each FOMC cycle, which is sort of 8 of those a year, they do a deep dive and they collect lots and lots of information about the economy. And so, and that information gets collated and put into what we call the Beige Book because it's beige. And we're not that original. And so we get that a couple weeks before each FOMC meeting. And I have to say, I don't know of any source of sort of qualitative information about the economy that even approaches this. It's just a lot of conversations with a lot of people, and I personally find it very useful. Sometimes you look at that book and you see significant regional differences, and this is not one of those times. So, for example, the Boston Fed piece in the last Beige Book talked about lots of spending on AI. Well, guess what? That was pretty common across 8 or 9 of the districts. So I would say nothing really jumped out from the Boston piece. What you saw was all around the country, you saw pretty modest growth, wage and price inflation at modest to moderate levels, the economy growing but not fast, and uncertainty, significant uncertainty about federal public policy is kind of weighing on investments and decisions about investment and hiring, except in the area of the AI build-out, which is just going really strong pretty much in many parts of the country.
So nothing distinctive from the Boston region that would inform your future decision-making, looking at the setting of monetary policy?
What I saw from Boston was quite similar and overlapping with a number of other districts. Again, sometimes that's the case where things are pretty much of a piece. Sometimes different regions, particularly if there's a commodity price thing, you would see maybe things in the commodity-oriented regions doing differently from other regions of the country. Right now, it's it's much more the same around the country, I would say.
So let's talk about and build on what you described a few moments ago about the dual mandate of the Fed. And if you could talk about these conditions that wax and wane over time, what signals will you be looking for in the run-up to the next FOMC meeting, which is in roughly 30 days?
We have 2 goals, as you mentioned, maximum employment and price stability, and they're equal goals under the law. So almost all the time, they work together. They complement one another. So, for example, when the economy is weak, the unemployment rate might be high and the inflation rate would be low, and that it calls for stimulus from us. And when the economy is really strong and the labor market is tight, that's when inflation will be moving up, and so policy might be a little bit tighter. That's almost always the case. Right now is the quite unusual case where risks to, as I mentioned in my remarks, risks to employment are to the downside and to inflation to the upside. Now, we only have one tool, which is monetary policy, really interest rates, and really it's calling for different answers. So for a long time, we have a document called the Statement on Longer Run Goals and Monetary Policy Strategy. We call it the consensus statement to save time. That says, for a long time, it's said that when the 2 goals are in tension, we'll look at how far each one is from its goal and the time that it's expected to take to get back to that goal. And so we balance the 2 goals. So what we've done all year this year is we've had our policy rate has been tight because inflation has been above our target, but the labor market was very solid. Now, over the last really 4 months, really over the summer, the labor market has softened, payroll jobs have dropped a lot, so we can't really say that anymore. And I think what that told us is that that stance of really having a tight focus on inflation really needs to moderate toward a more balanced approach. And so that's why we took the action we took at our last meeting. And as we go to our next meeting, to your question, we'll be asking ourselves, we'll be looking at the data very carefully, labor market data, growth data, inflation data, all the vast quantities of data that we get, and asking ourselves, is our policy in the right place? And if not, we move it there.
Some may wonder about the frothiness of the markets reaching record heights and also record valuations. How does the Fed think about that in the equation?
Financial markets? So we monitor financial markets very carefully. Our policy works through financial conditions, so that's credit spreads and interest rate levels and equity prices in the aggregate that can affect spending, for example. We look at all of that, but really our focus is on our two goals, and that is maximum employment and price stability. And when we see one of them weakening, we're going to respond appropriately with our tools. And in this case, that meant reducing the federal funds rate by 25 basis points. And, we'll see what the future brings, but that's what we do. We look carefully at financial conditions, more from a perspective, though, of financial stability. So we see that the banks are well capitalized. Actually, in the aggregate, households are in good shape financially. I know people at the bottom end of the income spectrum are under pressure. No question about that, but it's not a time of elevated financial stability risks.
Mm-hmm. So the federal funds rate really governs consumer credit, but not so as it pertains to mortgage rates, correct?
That's right.
And let's talk about how the average consumer is going to see any difference in the intervening months relative to an easing of interest rates and the ability and maybe even more confidence to spend.
So we don't set mortgage rates, but when we change the federal funds rate, it will affect the mortgage rates and also all other consumer borrowing rates. Really, all interest rates that are on a floating basis will move a little bit or even a lot if they're short term based on our moves. So the people will feel that over time. Also, it's not just these days, the market is pricing in the next 6 months what's going to happen to rates. So this is something that wasn't really the case, 50 years ago. Now markets listen to us and follow, and they make an estimation of where they think rates are going. And so they'll price things in. And so, longer term rates will move because of what the market expects, market participants expect us to do. So you'll begin to see, and you're already seeing, changes in rates long before we make the decision. It can often be already, priced in.
Is it fair to say that the Fed and the markets really have a higher tolerance for risk today, more so than perhaps before the pandemic?
I think if you look at some prices, then they're elevated relative to historical levels. There were times before the pandemic when it happens periodically. Equity prices will move up and down, and we do monitor that. But we're not targeting any level of prices for particular financial assets. We don't have a view that we know what the right price of any particular financial asset is. We do look at overall financial conditions, and we ask ourselves whether our policies are affecting financial conditions in a way that is what we're trying to achieve. But you're right. It by many measures, for example, equity prices are fairly highly valued.
Let's segue to the topic of AI, and largely AI stocks and periphery stocks really driving the markets in many ways. Let's talk a little bit about the great unknown of AI, and if we think about various ages, our industrial ages, whether it be steam to electricity to the information age and now to the age of AI, would you consider this to be the most disruptive force ever in modern American history?
I think it's way too early to say that. I wouldn't go that far. I would say clearly generative AI has all the earmarks of an emerging technology that could be very important in our economy and in our society. But it's very early to be, to be making that kind of bold statement. So, what we're seeing is companies and institutions like the Fed for that matter, are starting to experiment with what they can, how this new set of tools can be used in our operations. Mm-hmm. And it's very early days on that. Mm-hmm. And I think we have to wait and see. That's a good thing. I know many of the large financial institutions and other central banks, and we are asking ourselves, how can this help us do our jobs better? And I think it's going to be a period of experimentation over a period of years. And the history is always that there's a lot of fear that technological innovation will eliminate jobs. What has tended to happen in history over time is that it just raises productivity and creates new jobs to replace the old jobs. And that happens. And sometimes it can take a long time, but ultimately that has been the pattern for the last couple of 100 years. Is this time going to be different? I just don't think we know yet. I don't think anybody knows.
Mm-hmm. You are a labor market futurist, also a historian, and the concept of AI and humans in the loop, very profound impact on the labor force. What are your thoughts about specifically agentic AI as a differentiator from generative AI, and how will the Fed be looking at the impacts of the workforce, the labor participation rate, given the unknown of what could happen with displacement around AI tools at all ends of the spectrum?
Our tools work on demand, basically. Lower interest rates, higher interest rates, they work on demand. When there are structural changes in the economy, there's not a lot that an interest rate change can do for that. And so if you're talking about distributional issues or labor force participation or retraining or any of the things that come to mind in connection with those questions, that's really going to be something for legislators and the private sector. We of course, we have many labor economists, and a good portion of them are studying what the potential effects of AI on the labor force, and many great economists around the country and around the world are publishing on that now. And it really is too early to say. I think you can say that some jobs are going to be phased out, some jobs are going to evolve, and people are going to be further trained and that sort of thing, and be able to keep a job like that. And there'll be new jobs that come. And how will that balance work out, and what will be the timing of it? Mm-hmm. I think it's just quite hard to say.
But how does that factor into the deliberations on a near-term basis? Things are moving so quickly, and the observation and the argument that artificial intelligence isn't just impacting those entry-level jobs and those, quasi-unskilled jobs, but really tentacles reaching into highly skilled professions, whether it be finance, whether it be communications and media, whether it be healthcare, whether it be law, finance. So all ends of the spectrum, highly educated individuals down to more easily automated tasks. Sort of a really interesting problem for those of you that are studying labor market economics. How do you approach that?
Well, a lot of what we're doing with our time is trying to understand the current position of the economy, what's actually going on in the economy today. Pardon me. So part of that is hiring rate has really dropped. Job creation has dropped very sharply. So what are the factors there? So I mentioned earlier, I think, part of it just is there's a lot of uncertainty about the direction of public policy, and so companies are holding off, they're not hiring, and when you don't hire through attrition, your labor force shrinks and you save money that way. That may be a way of passing on tariff costs. It may be something like that. So that's happening. Lots of questions around whether AI is a major factor associated with the relatively low hiring rate for people just graduating from school and just entering the labor market. And people are doing studies on that, and I looked at one from Stanford, another from the New York Fed in the last week, and the sense of it was We think we can find some evidence that AI, generative AI, is having some, it's one of the reasons here, but we can't really say it's the main reason. Can't really say it's the main reason. And you know, we have our Jackson Hole conference every year in Jackson Hole, Wyoming, and we had some great labor economists, and one of the big debates was what's going on with AI, and there was a professor from, I want to say, Columbia, who just basically said, there's no evidence that this is acting any differently than other. Her view was not acting any differently from other technological, movements, waves, and so I think she would be more at the end of an optimist, a techno-optimist. Mm-hmm. We've all, there are books out there that will tell you the world is ending, and but I don't think we know. Again, I think we're going to see how this evolves, and again, if it does turn out to be something where labor force participation really declines in a way that creates, social difficulties, that's going to be something that legislators and the private sector will have to address. We just don't know that yet, though.
Over the weekend, I read where you had been discussing, just picking up on what you said about Gen Z and college graduates and any possible disruptions in trying to find jobs. So Gen Z would be those born between 1997 and 2012, roughly ages 13 to 28. What are your thoughts on college enrollment? We'll talk a little bit about labor disruption in just a minute, and Jackson Hole, because I know that's a favorite of yours, but a lot of...
All right, guys, can you all hear me? I myself will be ending off the stream here. Now, I do have another very good guy. If you still want to watch this event, go to this guy, Crypto Host. He is still live streaming this event. He is still talking about it, discussing it, and he will be giving you a final review, etc. So make sure to go ahead into this guy, Crypto Host. You can search it up on YouTube, find this channel over here, and he's also live streaming this event now, and he will also do a great analysis. So make sure to watch and go to his stream and watch his stream. Now, anyways, guys, of course, you all know it already. If you want to get more alpha, of course, join my private Telegram community where I share everything in absolute real time about my new trades. If we're going to dump overnight, well, then you know what to do. Well, I'm going to get entered, and then I'll give you an update about it in my Telegram community. So make sure to join it right now. Of course, all of the alpha I already discussed here is already mind-blowing, but over here you'll just get a lot more alpha in real time, earlier, quicker, more alpha, etc. right, about my trades, etc. Anyways, join that group. You've got an amazing offer, 10K free Ethereum trade by depositing 10K and much more that you can check out with this link over on Weeks, and also 25% trading fee discount, etc. And Weeks is my trading exchange I'm currently trading on because it is the best one out there, cheapest fees, highest rewards, etc., etc. Anyways, with that being said, make sure to go over on this stream now if you want to get more alpha. I'll put it in the live chat over here. There you go. So you can join this live stream and yeah, show him some love, show him some support, subscribe to his YouTube channel, just spam in his chat. I just came from Mr. Crypto. That would really mean the world to me if you're gonna do that. And yeah, with that being said, I'll catch you in another stream later. Go to his stream now, and guys, bye-bye. I'm going to be active in this chat for a short little while. So, yeah, you're going to see me in the stream over here, in the live chat over here. So, make sure to join and chat with me in this new stream on Crypto Coast. Lovely. It's lovely. So, anyways, bye-bye, guys. Bye-bye.